Hey, this is Matt from InvestiQuant. Today is Thursday, February 11th, 2021, and yesterday we put in this bearish outside day pattern. Today we are getting another candlestick forming called an inside day, which is kind of the opposite of that outside day. So outside days are where you take out the high and the low of the prior session. An inside day is where you do not take out the high or the low of the prior session. So kind of opposite action. It is a bit quieter today than yesterday's session, but we did get a nice little sell-off here into the afternoon. We do have a good amount of range for the volatility environment that we are in, about 36 points of range here in the S&P today. And what I want to do this afternoon is take a look at what has happened historically going into the close when you have an inside day forming on the heels of a bearish outside day. So let me go ahead and hop into Discover, and we will test this pattern and see what it has led to historically. So let me add all four instruments. We're going to use an intraday time-based entry of 3 p.m. Eastern Time. It'll exit at the close 4:15 p.m. Eastern Time. It'll be set up as a long. Now, to describe this inside day that is forming, I'm going to go into the post-open filters, and I'm going to say that the high of the current session is not greater than the prior day high. So I'm going to come in to intraday high versus daily levels, and I'm going to hit minus next to greater than prior day high. And then in the section next to that, intraday low versus daily levels, I'm going to say that the low is not less than the prior day low. So that means we have a higher low and a lower daily high that is forming as of 3 p.m. Eastern Time, since that is the entry time that we're looking at here. Next, I'm going to go into the price patterns. I'm going to grab that day after a bearish outside day by going to the candlestick section, scroll down to the bottom, hit equals next to day after bearish outside day, and then go into indicators. I'm going to say we are above the 10, we are above the 200-day simple moving average. Then I'm going to click view results. And here we go. These are the results of going long at 3 p.m. Eastern Time, exiting at the close 4:15 p.m. Eastern Time, when you have an inside day that is forming as of 3 p.m. Eastern Time, which is on the heels of the prior session having a bearish outside day. This has taken place above a 10 and above a 200-day simple moving average. Historically, the S&P has 31 samples, the NASDAQ 25, the Dow 26, and the Russell 25 samples dating back to 2003. So if you look at them as a group, a little bit over 100 samples altogether. If we look at the win rates on them, they are all a little north of 55, with a couple of them being a bit stronger. So the S&P coming in at 58%, the NASDAQ 64%, the Dow 58%, and the Russell, the strongest of the group, at 68%. And that win rate is telling you how many of those have closed above the entry price, which was 3 p.m. Eastern Time for this test. If we look at the average win and average loss on these, you'll see the average win a little bit bigger than the average loss there for the S&P. They're pretty similar in size for the NASDAQ. The average win a little bit larger than the average loss in the Dow, and they're pretty similar in size for an average win and average loss in the Russell. So a couple of them have larger average wins compared to the average losses, and then all of them at least mildly bent towards the long side here historically as it approaches the close. You've got the NASDAQ and the Russell being a bit stronger than the S&P and the Dow. So hopefully you found that helpful. Good luck the rest of the day, and we will see you tomorrow.